We're live.
Hi. Let's see if anybody pops on. I'll just wait a second. We'll just
so we've been
stare.
going there. The kids love it. I mean, there's like, the creek actually runs through there. They can play in it. My middle child loves bugs and frogs, and so he's like in heaven there. So.
Your 4-year-old?
Yeah.
Cool. Oh, I thought I saw someone. Oh, well.
How do you know?
It'll pop up and say like a 1 up by the live. So hopefully people will pop on. If not, it'll be recorded. So
That's what most
hey,
of the news
Mom
come
Nation.
from, other recorders.
Yeah.
Yeah.
A lot of people are busy. I mean, it's 12. Kids are napping, or, doing their thing.
Summer vacation.
Hey, Mom Nation. This is Jen Duncan here. Oh, we got someone. See? Oh, they're gone. Oh, well.
Yeah.
So we are going to be talking about appraisals. I know a lot of people get scared about appraisals. I am with Team Evolution Real Estate. This is Ryan with
Ryan from
WaterStone.
WaterStone again. Nice to see everybody again.
He's pretty awesome. I know you've been on like 3 times.
Yeah, it's our 3rd time.
And this is Gabe with,
Gabe Chorizo with Firebird Appraisals.
yeah, super nice. Hey, Rose.
Hello, Rose.
So we just want to educate you guys on what an appraisal is, kind of differentiate it from inspections, which it often gets confused with.
Right.
And just answer any questions you guys might have. So you can ask questions live. We have a couple of pre-asked questions from the group, so we'll go through those. This will be recorded too, so if you miss it, you can watch it back. I'll post it. So, dun dun dun. Ooh, we got someone else. I don't know who. Okay, so the first question that we want to ask is, what are appraisals for and why would I need one?
Let's see.
So Gabe does this every day, appraises homes.
Right. Yeah. So I mean, there's. Let me jump back to where I am with that question. There's a few different reasons why you would need a home appraisal. I mean, the main reason you would need it would be for a mortgage transaction. So if you go to buy a house, if you go to refinance a house, your lender or your loan officer or mortgage consultant like Ryan would actually order the appraisal, and we would go out, do the inspection, and just verify that the home is actually worth the sales price, or whatever the refinance amount might need to be in order for your loan to get processed the way your guy is looking to get it processed. That's probably 90% of the reason why you might need an appraisal. There's other reasons you might need an appraisal, as far as maybe for an estate, to value an estate, or if someone passes away, you might need a date of death appraisal. Other reasons, PMI removal. If you have a property that you bought maybe 5 years ago and you didn't put you had to get mortgage insurance on it, but now you have equity in it because the property values have increased over time, you would get an appraisal through Ryan again, and then you would remove that PMI and not have to pay insurance on it.
Cool.
So those are a few reasons why you might need an appraisal.
So as a buyer, if I'm buying a house and you appraise it, the purpose is to just make sure it's worth what you're buying it for, right? Hopefully it's worth what you're paying for it, right? When we work with our clients, we do run some comparable homes, and see, just to make sure that we're offering a good amount. Like we were talking out there, that sometimes people will offer like 10 grand more on an asking price, and then the appraisal will come in low, and then you have to deal with that. So nobody wants to pay more than a house is worth.
Right.
Let's see. What are 3 approaches to an appraisal? Someone said they've only purchased new builds, so they don't know how it goes.
Yeah, I mean, the approach is, in the appraisal, we got to, it's our obligation for a mortgage finance appraisal to consider all 3 approaches, which are the sales comparison approach, the cost approach, and the income approach.
What's most common?
Well, I mean, we have to, in the report, we have to at least consider all 3, but for our report for a mortgage transaction, let's say, is based mostly on the sales comparison approach. So that's actually finding sales that are most similar to your home in your market area, putting them in our report, adjusting for any differences, and then considering obviously market trends. Is the market value, are they increasing, are they decreasing, is the market stable? So we look at all that, and then based off the sales and our adjusted values, we come up with the indicated value.
Okay.
And that's the sales comparison approach to value.
What do you usually give for a pool? Everyone wants to know, will I get my money back for my pool?
Right. That's a good question. I think a lot of times, and when I talk to realtors and when I meet realtors at properties, a lot of times that's one of the first questions I get. Hey,
Right.
what's a pool worth?
Spent like $50,000 on a pool. Like,
yeah.
what if you go to sell?
Exactly. And it's not an easy automatic answer.
Okay.
It all depends on where you're at, basically. So like, I've done appraisals where I've been in maybe what do you mean? I would say maybe tougher neighborhoods where property values might be even under $60,000-$70,000, and they have a swimming pool. And when you go to look at market value, for that swimming pool in that market area of that market segment, there's no value. So like there's a house, your house has a pool, a home just like it, same size, same condition, overall everything, doesn't have a pool, and it's selling for the same amount. So that tells us as appraisers, for that amenity, the pool
It's
isn't
not
worth anything.
worth it then. But like, what about like on a $200,000 house?
Right. So then I've also I do a lot of new home construction appraisals, and a lot of times though, now we're talking about $500,000-$600,000 homes, and they're putting in $65,000 pools, and we're making it. We can find support. We have to find support for our adjustments. So we have to figure out what is the market willing to pay for this swimming pool.
Okay.
So we do that by obviously talking to the sales agent, seeing what homes have pools, and then seeing how the market reacts to it. So in those cases, we make adjustments upwards of $25,000 to $35,000 for a pool. So your range is 0 to that, pretty much.
Okay.
And then
So-
if you're talking about like a regular Higley Groves neighborhood, swimming pool, $250,000 house, you're probably looking at an adjustment anywhere between like $10,000 and $15,000.
Okay, that's what I thought.
Yeah.
What about like on a new build if somebody wraps it into the mortgage? Have you had it happen where it doesn't appraise?
All the time.
Really?
Yeah, I mean it's very difficult because
So is it better to do it after?
that'd be a question for Ryan. I don't know how. I don't know why we do get a lot of new home appraisals with pools. I think a lot of times the LO, the loan officer working on that file, kind of understands that it's not going to make value, but they'll roll as much as they can into the loan. Is how I understand it.
That's
Okay.
exactly it. Yeah.
Okay, yeah. So they're out of pocket less basically. We come in short, and now they're able to roll some of the cost of the pool into the loan.
Oh, we got a question from Allie. She's actually selling her house now. Is it difficult to bounce back from a low appraisal? What do you mean? Can you elaborate?
If you're selling a house and the appraisal comes in low, you have a few choices. If it's an FHA, if you're selling your house and it's an FHA appraisal, it's going to stay with your property, so you won't be able to get another FHA.
You're going to want
For a
another,
while.
yeah. So if you're going to relist your property after you get a low FHA appraisal, you're going to want to get another offer that's a conventional. So when you go that route, you do have to get a brand new appraisal and hope that the next one might come in higher.
Right.
That's correct. Yes.
Hey, Rosanna. Okay. Oh wait. Oh.
But maybe we should talk about.
No. I didn't know yours came in low. Okay, we'll talk about that later.
Maybe we could talk about what we could do when it comes in low. I mean, we could always,
Yeah.
one thing that we do at WaterStone, if it comes in low, we always try to submit an appeal. And the way to do an appeal is you have to look through the appraisal report and try to find anything that sticks out that might be incorrect, maybe the square footage, maybe the lot size, maybe room count, or maybe there's just some other homes that sold in the area that wasn't on the appraisal that you feel might be good comparables. So what we would do is we reach out to both agents and we kind of put all of our heads together and try to collect comparables that we feel might represent a higher price. And we would send it to the appraiser like Gabe, and Gabe would take a look at it and see if he would consider them and maybe readjust the value. It doesn't happen very often because, appraisers do a great job and find the best comps. But if it does come to a point where there's one comp that was missed that increases the value, sometimes we get increases in the appraisal. So that's something you'd always want to do is maybe appeal the appraisal and try to find better comparables.
How many appeals typically win?
I would say probably 20% maybe
20.
get an adjustment. That's correct.
Okay.
Yes.
Okay,
Yeah.
cool. So hopefully it works out. What else do we got? We have, what should I do to prepare for an appraisal? Is there something the seller needs to do in the house? Do they need to clean? Like,
Yeah.
all that fun stuff.
Yeah, no, I did touch on this a little bit. I think it's important, as appraisers, we're human, so perception can be reality sometimes. When we come into a home, we're not looking at personal belongings. We're not really even looking at cleanliness or how tidy it is, but all that stuff helps. I mean, because when we come into the home, and you're trying to get, top dollar for that market, for that home, it's important to allow the appraiser to see everything. So let's say you have granite countertops, but they're full of dishes and dirty dishes, and standstill appliances are dirty, and there's dishes and pans all over it. It's hard to look past that, where if we walk in and it's clean, everything's been cleaned, it's picked up, it's ready for your inspection, your home's going to show better, and we're going to be able to say, you know what, this house is super nice, and it is, it should be valued, near the top of the market for this particular home.
Let's see. So what is the difference between an appraisal and an inspection?
Yeah, I get this question a lot too. Yeah, I mean, a lot of people get us confused with home inspectors. So I'll call, and I'll talk to the homeowner and say, hey, I'm calling because I'm doing the appraisal for your home at whatever the address is. And they'll say, no, we already got the inspection. And I'm like, well, did you get an appraisal inspection or a home inspection? Oh, we got a home inspection.
So a home inspection just goes through and makes sure that everything's working, it's safe and stuff like that. Your job is to make sure it's also safe, right? In certain cases, and make sure it's worth what they're buying it for.
Right.
So it's two separate things.
Yeah, home inspections are optional. That's something a buyer chooses to do, and they actually pay for that out of their own pocket.
Yeah.
So that home inspector is actually, they're going to be biased towards the buyer because that's their client. They got hired by them. They want to keep working with that agent moving forward. Our job as appraisers are to be non-biased. In a mortgage transaction, a purchase, a lot of times we're the only ones who are non-biased, right? Because we have our client, but the clients also don't want us to stretch value or pull for stuff because there's liability on their end too. So they want a fair value, and that's what the difference is. I mean, the inspection, what we do at our inspection is a lot different. Home inspectors will spend 2 or 3 hours at the home. They're checking receptacles, they're checking insulation, they're walking the roof.
Air conditioning.
Yeah, they're checking everything and temperature splits with the air conditioning units. When we do it, a 2,000 square foot home, we'll do in 30 minutes to 40 minutes. And we do test, the functionality of the HVAC, but it's more of, hey, I'm going to turn it on and see if it's blowing cold. If it is, it's working. We don't go to check the temperature splits. We don't check every single electrical receptacle. We do run wire, and every loan product, whether it's FHA, conventional, or VA, they all have their own property standards that we have
Right.
to.
I noticed that
test.
with FHA. Are they really strict on safety things? Because I noticed that,
Yeah, we get that
a light
question a
bulb
lot,
or
yeah.
whatever might be on there sometimes, or smoke detectors, self-closing doors and stuff. Like, how do you guys determine that?
Yeah, it seemed like back when I first started, FHA hasn't changed a whole lot, but conventional, on the other hand, when I first started, it seemed like conventional would be like anything goes, right?
Right.
It didn't need to have an HVAC that was working. It didn't need flooring. It didn't need a lot of things that FHA needed. Well, as the market, the bubble happened and it blew up, and since then, Fannie Mae, which is conventional appraisals, the guidelines that we have to follow for conventionals have changed as well. So we still have to comment now on marketability. How does this impact the marketability? And if it impacts the marketability where we can't find anything else like it, then now it's a repair requirement for conventional, where in the past that wasn't the case. So to answer your question, if it's a safety issue, it doesn't matter. VA, FHA, or conventional, we're calling for it. If the window's busted in, that's going to be a repair requirement.
Okay.
If the HVAC doesn't work, it's required. It's
Safety.
required,
Right,
for all
okay.
loan
How-
types.
Why are FHA and VA so stringent? Is it because it's government, or Like,
You know, I do VA appraisals. I do conventional and FHA, obviously. I would say that conventional and VA are most similar.
okay. FHA is pretty stringent.
FHA is very stringent. Yeah, I mean, they're going to have specific property requirements. They have the appraiser comment on stuff that is a lot of times outside our expertise. Like, we have to comment on whether the roof has 2 years remaining life. If we can't, I mean, if it's not obvious to us that that's what it has, then we're calling for a roof cert from a licensed contractor,
okay.
because there's liability for us to say, yeah, it has 2 years. We're conventional, we don't have to comment on that, and neither do we for VA. So that's just one example of how FHA is a little more stringent than, the other loan product.
Because FHA, for those who don't know, an FHA loan, you only have to put down 3.5% to buy a home, and conventional is 3%.
You could do 3% if you're a first-time home buyer, but if you're a second-time home buyer, 5% is the minimum. So there's a misconception that when you do a conventional loan, you need 10 or 20% down, but they do have 3 and 5% down programs now. And I'm glad you're mentioning the difference between like an FHA and conventional VA, because you'll see listings out there that say they're not going to accept FHA appraisals.
And that's probably because they're in
or
bad
offers,
shape, right?
and that's typically because it's in bad shape, or they're concerned that the appraiser is going to call out something that they're not willing to fix. So that is why you'll see a lot of listings say not accepting FHA offers. Yeah.
Oh, Aaron came on. Hey, Aaron.
Hello, Aaron.
I was actually just going to look at your question, and we kind of just covered it about inspectors. So I think your questions, it was what do inspectors look for? Should I repair everything beforehand or wait for the inspection? How long does it take? Inspections are different than appraisals, because the inspection is they're checking to make sure everything works and everything, and the appraisal is checking for the value of the home. So I think we kind of had those a little mixed up. Let's see.
For sellers, though, if you are worried about the inspection, or you know that there are some repairs,
Can get a pre-inspection.
yeah, I mean, you could pay the money, get a home inspection done, fix the items off it, and then it's a good marketing tool for when you do sell. Hey, it's already been inspected. The buyer doesn't have to pay for an inspection now, and not only has it been inspected already, I've already done some due diligence and fixed some stuff. So these are the items I fixed.
Yeah, so it's not a bad idea.
Yeah, it might impact yours.
Like, if you really want to market yourself good and sell quick, it's a good idea. Or you can just wait and leave it up to negotiations too. I mean, you don't want to overfix things if the buyer's not going to ask for anything, but you never know. What else did we have? Do you have any other questions?
One thing I was going to ask you, Gabe, we were talking about what you could do to the property before an appraiser comes by. I had a seller that actually listed out all the repairs and upgrades he did, the prior 2 years that he owned the home, and gave it to the appraiser. Would you recommend doing that to help you kind of know the adjustments to make?
Absolutely, yeah. I mean, I think it's important, the appraiser's using his eyes when he's out there and he's looking at, it's easy for appraisers to realize, hey, they have granite countertops, they have updated appliances, it looks like the flooring's new, the paint. It's always important to note to an appraiser things that he can't see. Like, let's say you have a rooftop HVAC unit that's brand new, a new roof, a new tile roof, which looks exactly the same as it did before it was new, because they did the underlayment, they put the tile back on. Appraiser would never know that, but it's a costly investment for the seller. New water heaters, things like that.
I know that's something that Katie does on her listings. Like, she's our listing agent and admin for the group. She'll do all the upgrades and provide comps and stuff like that ahead of time.
Right.
To
Great idea.
help you out, rather than having to go back and forth and be like, well, no, I have these upgrades and everything.
Right. And I think,
she's good with that.
And I hear a lot of agents, I'll get calls from agents, or I'll meet them at the inspection, and they're a little bit, not timid, but they're unsure of what they can say to us, and like how they can communicate with appraisers, and like, I don't think I'm supposed to tell you this, is this okay? And I always tell them I'll take any information I can get. So whether it's from a listing agent, a homeowner, whatever it is, I want as much as I can get, because it's going to help me in my report. And I always try to tell agents, if you're out there listening, just to make sure that when you do pull comps, one, don't ignore sales in the neighborhood. So like, if you're doing like an 1,800 square foot single story home, and there's 3 of those plans that have sold in the last 4 months, but they're low, don't ignore those ones to go outside the subdivision.
Because
and
those
pull
will come up
something else.
anyway, right?
Right.
Use those, yeah.
And don't be scared that, this one sold for $8,000 less, but it was in original condition and were remodeled. Because we make adjustments for those type of things too. So don't let it scare you off that, there's sales in there that might not be at your sales price. And then don't provide those and instead go somewhere else. Because then, appraisers will look at the information and you lose a little bit of credibility.
How do you adjust for being backed up to a major road? Is that a big one?
It can be, yeah. And this kind of goes back to the pool comment and what a pool adjustment is. It's the same idea. Some areas, we're talking about the same area where the pool wasn't worth nothing. Well,
basically, it depends.
Yeah, the impact on that busy road is going to be less in that neighborhood because it's all about buyers' expectations. Where you're talking about the neighborhood where they're $500,000-$600,000 homes. With people buying those, they don't want to be backed up to external issues such as busy roads. So the impact's going to be a lot heavier.
Yeah. Well, how much do you? I mean, you probably can't really say, but is it like 20 grand, 30 grand? Like,
I mean, it's tough to say. I mean, it really is house to house, and I mean, in that case, it literally could be house to house in that same neighborhood. It really depends. That's a little bit more difficult to say.
Yeah, because I know a lot of buyers are like, I don't want to be by a major road, and some are like, whatever,
Yeah.
So I'm like, well, if you don't care, maybe we could get you a better deal than an interior house.
One way to get
Exactly.
home.
Yeah.
Yeah, absolutely. But then you're gonna have to sell it later.
That's true. So it's something to think about. I always say that. I'm like, hey, well, you don't care now, but later.
Right.
I know our new home is actually going to back to the neighborhood road, which they said might be Warner in the future. So there's potential to be a little bit loud, but I don't really care. Because there's nobody behind us and it's one story, so it's fine. Let's see. Did you want to touch on anything at all?
Well, really, I mean, you addressed it, but I was wanting to kind of talk about the difference between the FHA appraisals and the conventional. I guess what's a major repair that you see that FHA requires that conventional or even VA you don't really are going to require?
Yeah, that's a good question. A lot of, let's see, FHA cracked window panels would need to be fixed.
So conventional though would not.
It would not, unless it's a safety. Unless you can say, hey, I'm going to cut my hand on that. What's another one? Chipping paint. 78. If your home was built in 1978 or before, if there's any chipping paint on the exterior, an FHA appraiser is going to make you scrape it and paint it. If it's conventional, it depends. If you're completely bare and if the wood's completely bare and it looks damaged, he's probably going to have you fix it. If it's not though, and it's just chipping paint on the side of a house and it's conventional, we're just going to note it as deferred maintenance. And it's not going to be a repair. Let's say like a small leak at the toilet or something, or the major toilet's not working, we turn the valve on and it starts leaking and that's why it's not working. Conventional or VA, we're not going to call it as a repair, it's going to be deferred maintenance, but with FHA, it's going to be a repair.
Okay. Now, FHA, for most people that don't know, is homes like generally under 280, right?
Yeah. The max is 289 right now. If you go any higher than that, you do have to do a conventional, or you have to do a
279?
Yes, that's correct. Yes. Yeah, it changed.
289 now?
What's that?
Is it 289?
279.
Okay,
Did
279.
I say 289?
I think so.
Oh my, yeah.
That's like the loan.
I was thinking about the purchase price because when you do 289, you can do the purchase price. It's 3.5% down. Then once you do that, it'll bring you down below the max FHA loan amount. So anything over that, you do have to go to a conventional loan where it's 3 to 5% down, depending if you're a first time or second time home buyer.
Is there anything that gets called out if you're doing the grant program? Like where you do zero down?
It's not any different, yeah. If you're just doing it, because to an appraiser, they don't even really see that.
Okay.
They just see it's an FHA, conventional, USDA, and not that there's where the down payment's really coming from.
Yeah, crazy. You can still buy with zero down.
Yep,
That's
you can.
crazy.
A lot of people don't know that. There's that down payment misconception I was talking about. A lot of people think you need 20% down, but with the local grant programs, I know in the first video that we recorded, if you haven't watched it, there's Home in 5 and Home Plus grant programs where they give you anywhere between 3 and 5% to help with your down payment. And if you're working with a great agent like Jennifer or her team with Team Evolution, a lot of the times they could negotiate to have the seller pay for closing costs, so you could get into a home with no money down. So Yeah.
And you have your awesome appraisal coupon too.
We do. Yes.
Save,
Yeah.
what,
We
$400?
cover $400. We give a $400 credit at closing. That's
And then
correct.
we have our coupons. It's $500 off closing. We have a couple of them. So
All free stuff.
a lot of stuff for people to take advantage of. I was gonna say something and I totally forgot.
One thing that we were talking about before the video, I get the question a lot where people are wanting to buy a house. They might know an appraiser, and they ask us, "Hey, can I use like my appraiser friend to look at the home?" And unfortunately, lenders are no longer required to do that. There was a law that was passed, gosh, I think it was 5 or 6 years ago, that even more than that probably feels like yesterday that rolled out. But what we're required to do is when we order an appraisal, we can't pick who the appraiser is going to be. We have to submit our order into an appraisal management company, and they randomly select one of our appraisers that we have on our team. Gabe is one of ours, but we have, I think last time I checked, about 9 different appraisers that we have on our team. So sometimes he gets my reports and sometimes someone else does. So we can't really have much communication. Most of the communication can only be between Gabe and the agents and the seller of the property. And really the only time that we find out who the appraiser is when we get the report. So, yes.
If you ever wanted to know what your home is worth, you can definitely contact Gabe and he can do a private appraisal too.
Yep.
Or like if you have a house with lots of land or something like that, you don't know if there's nothing to compare it to, contact Gabe. He'll help you out. I can't think of anything else. Does anybody have any questions at all? No? Erica? I see Erica and Tracy. Cool. Well, this will be recorded, so if you guys have any questions, let us know. Also, if you're thinking of refinancing, contact us. It's not something that we charge you for, but Katie can help you look at the comps and stuff like that to see what your value is, to see if it's worth refinancing to get rid of mortgage insurance or something like that. So that's something she does as a courtesy.
Actually, I know another good question I could bring up since we have some time. How do you feel about Zillow, Gabe, and the differences between...
Zillow.
Yeah. So people, I get the calls a lot, but hey, Zillow's telling me this. How have you really seen actual appraisals different from what Zillow's showing?
Well, I do hear that too sometimes. Zillow, like homeowners will go for a refinance and the homeowner will say Zillow, or they'll have it printed out. Zillow
But
says
Zillow
this.
said.
Yeah.
Right. My experience has probably been about 20% accurate within 5%. So, 20% of the time it could be accurate within 5% of the true value, basically, is what I've seen. So it's not very accurate.
No, they don't take into account upgrades or anything like that. It's just...
It's all based off square footage that's sold in your neighborhood.
Mm-hmm.
So they look at 15 sales in your neighborhood. They add all the square footage of the homes. They add all the price of the sales. They divide it and they get a price of like $145, and they multiply that by your square footage, and they say your house is worth that. In some cases it's close, and in most cases it's not.
In our case, I think when we refinanced our house, the Zillow value was lower than it came in the appraisal.
That's good.
So some people might not realize what their house is worth and might be just waiting. But
So bottom line, it's a good ballpark, but the actual appraisal could be a lot different.
it's just an algorithm, pretty much.
It is, yeah. You need a real person going out and actually looking at the home. And Gabe, another thing that I come up with sometimes is when I talked about the appeal, sometimes listing agents or buyer's agents, they look at the square footage and they notice it's different from the tax records.
Right.
So you have to actually measure the home.
Right.
Correct?
Do
Right.
you?
We do.
Oh,
So
wow.
yeah, every
So that's
appraisal,
what we do.
we're taking true measurements of the home. And like Ryan said, a lot of times, there are times where it's quite a bit different. You might be 200 square feet smaller, which really, really impacts the value. Or 200 square feet bigger, which impacts your value in a positive way. So when that does happen, we obviously have to reevaluate our comps, and it's going to change the value of your home versus what your agent might have told you based off what tax shows your home to be as far as size. So yeah, I mean those are hurdles we gotta get over sometimes.
Yeah.
Cool beans.
So don't trust tax records.
Yeah, I mean,
that's
Don't
true.
trust your builder, yeah.
You know what? I do know someone in the moms group whose house is, the tax records say actually higher square footage than the house is.
Yeah.
And it's always been wrong. So what happens in that case? I think they're getting a refund on their taxes actually because of it, but
I think if you ever have a concern that the house might not be accurate, and you're going to go to list it.
Do a private appraisal first.
Yeah, I mean, a lot of appraisers will actually just come out and measure for you as one of their services. And they're going to charge.
That's cool.
They're going to charge you a fee, but it's not going to be the fee for a full appraisal.
Mm-hmm.
And even agents, another thing I tell agents is that too. Like if you're ever unsure about the square footage, contact an appraiser, because let's say your agent lists your house thinking it's 2,000 square feet, so that's what they base the list price of, and that's what the sales price comes in at. And we go out there and it's 2,300 square feet. So now we appraise the house for 225.
Ooh, you're gonna have a mad seller.
Right, the sales price is actually 200. So if there's ever any concern, I tell agents, if there's ever any concern of the square footage might be off, it's worth it to contact an appraiser to come measure it.
That's great. Good advice. How much does that cost typically?
It's not something that we do a lot of, but I mean, I think there's probably appraisers out there that might do it for $50, $50 to $100.
That's not bad.
Which,
if
you're talking, because there's no getting out of it. I don't think there's any getting out of it at that point.
No, I mean, once the seller accepts an offer, they're kind of in for it. That would be great for houses that are not, the same cookie cutters, yeah.
So you're talking about like custom homes, older homes.
Yeah.
A lot of that stuff isn't what you think it is.
It's a good idea to verify it, yeah.
Mm-hmm. So.
Good point. Yeah. Cool. Well, if you guys have any questions at all, contact me. I'll get you over to Ryan. Ryan's awesome. If you ever want to buy a home, or you're thinking about it, or you need some credit help because you're going to buy a house, just contact him. He doesn't bite.
Always here to help.
No biting. He's really cool. So even if you're like a year out, just contact him and he'll get you on the right path.
Yeah, that's what we have. We have a pathway to purchase program. So a lot of people, they don't want to, they continue to rent and they don't buy because they're scared. They don't know what the first step in the process is. And really it's talking to a lender, and it takes 10 minutes over the phone to collect your information and do a credit check. And even if you don't qualify right now, we'll put you on a path to buy. We'll send you a copy of your credit report, which isn't like what you'll get on Credit Karma or something, which usually is not very accurate. It's like a Zillow. Yeah, Credit Karma is like, the Zillow of credit reports. So we pull, 3 bureaus, TransUnion, Equifax, and Experian, and that's what all banks are going to pull, either mortgage banks or if you're trying to get a car. And a lot of times those are about 20 to 30 points less than you're actually going to get on Credit Karma. So it would be good for us to actually pull your report so you get an accurate idea of what it is and what needs to be done to eventually get you qualified. If you need to maybe pay down a credit card or pay off a collection that popped up, or just wait a little bit more after there was a delinquency, we'll point out what needs to be done and kind of put you on the plan to eventually get home.
I've been on it for a while, like a year maybe. Yeah. I don't know. We're still working on it, but it's been really helpful.
A lot of improvement though,
Yeah.
Yeah.
Cool. All right, guys. Well, have a good day. We'll talk to you soon. We'll come back with something else another time. Bye.
Bye, everybody.
Bye.